Good morning. A new week begins with the world adjusting to a seismic shift in trade policy and a critical week for corporate earnings. From the first full day of the Greenland tariffs to the high-stakes tech reports on Wall Street, the global landscape is moving fast. We begin with the Greenland standoff. Today marks the first full business day under the new 10% U.S. baseline tariff on 8 European nations, including Germany, France, and the UK. While President Trump hinted at a framework for a future deal following his meeting with NATO Secretary-General Mark Rutte in Davos, the tariffs have officially gone into effect. European leaders are currently meeting in Brussels to coordinate a response. France is reportedly pushing for the use of the anti-coercion instrument, which could lead to restricted access for U.S. suppliers to the EU market. However, Germany is urging a more cautious approach to avoid a full-blown trade war. In the Middle East, tensions remain high as Houthi militants issued a new warning to the shipping industry, signaling they will stand by Iran in the event of any U.S. or Israeli strikes. This has put a halt to the short-lived optimism regarding a full return to the Suez Canal.
In finance, the Budget 2026 announcements from India have caught the eye of global investors. Finance Minister Nirmala Sitharaman announced a fiscal deficit target of 4.4% for FY26. With a massive hike in public capital expenditure to 12.2 Indian rupees lakh crore. This focus on infrastructure is aimed at cementing India's position as a global manufacturing alternative. On Wall Street, the January effect has transitioned into a February fear. Investors are bracing for a week of extreme volatility. While the S&P 500 showed resilience last month, the US dollar is under pressure as political noise surrounding the Federal Reserve continues. Notably, gold and silver prices, which had been in a free fall late last week due to a surge in the dollar, have started to stabilize this morning as traders seek hedges against the new European tariffs.
The technology sector is facing a week of reckoning. Later today, Meta is scheduled to release its latest earnings report. After Meta's previous warnings about significantly higher capital expenditure for 2026, shareholders are demanding to see how the roughly $475 billion collectively spent by big tech on AI will finally translate into bottom-line profits. Microsoft has already set a high bar, reporting a revenue surge to $81.3 billion, driven by a 26% growth in its cloud business. However, the report also highlighted a staggering 150% jump in water use required to cool its AI data centers, sparking a new global debate on the environmental sustainability of the AI boom. In semiconductor news, Micron and Western Digital continue to outperform the broader market, as they benefit from the massive hardware requirements of the ongoing AI infrastructure build-out.
Finally, in logistics, the industry is dealing with a dual canal crisis. The long-awaited return to the Suez Canal is in jeopardy. While Maersk had planned to resume transit, CMA CGM has officially suspended its Red Sea routes again due to escalating regional threats. Combined with the Panama Canal's continued drought-related restrictions, global freight rates for Asia-Europe and Trans-Pacific routes remain elevated. Shippers are being warned to expect logistical whiplash as vessels diverted around the Cape of Good Hope begin to collide with those attempting the Suez crossing, leading to severe port congestion in Europe and Asia. In India, new reforms in special economic zones, SEZs, and the removal of value caps on courier exports are expected to provide a significant boost to small-scale e-commerce exporters, aiming to streamline the Make in India global supply chain. That concludes our global briefing for February 2, 2026. We will continue to track the market reaction to the new tariffs as the European session opens. Have a productive Monday.